Hey, hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm going to get you folks what you need to know before you roll, and that's going to be talking about the economic data, how that impacts the overall markets with a little market analysis, maybe sprinkle in a little geopolitical fodder to round that all off, and then talk about some option strategies we could implement into our portfolios based on the assumptions we come up with in this market analysis. All right, so without further ado, let's get on with the market data coming out. This week is going to be a busy week for market data, folks, starting out tomorrow, really, with the flash estimates on the PMI Purchasing Managers Index. Remember, this is one of my favorite economic data points. Why? Because it's forward-looking. It is the folks that are in the front lines of the manufacturing process. They're in charge of purchasing the raw materials that come into the manufacturing process. That's the guy that we want to keep an eye on because he sees the demand and he is forecasting what they are going to be producing going forward. Now, this is more of the European economic data points coming out tomorrow, so keep your eyes out there. We also get our flash manufacturing PMI as well. That'll help us get a good gauge of what's going on here. But the most important data point that we're going to be looking for Purchasing Managers Index is the ISM, which is the Institute for Supply Management. And then Wednesday, we get crude oil inventories, obviously, on a Wednesday, but we also get durable goods. And then Thursday, we start heading into European holidays on Thursday, Friday. So we probably could see some lightning volume throughout that, but we do get retail sales and unemployment claims here in the United States. And finally, on Friday, personal income, personal spending, and wholesale inventory. So busy week for economic data that will actually be something that will be driving the markets. Now, we talked about how last week, pretty much we are going to be listening to the Fed heads talk. Well, it's going to be a continuation of that this week, but at least we have some economic data to back up market moves here. Davos is happening, so all the Fed governors are there. They're going to be talking here and there through interviews and just speaking engagements. So that is going to be something else that we're going to be very highly aware of and keeping our eyes on. All right, let's get on with the markets here. We've got crude oil continuing to climb. I don't know if you were out this weekend, but you probably noticed that gas prices are through the roof. As a matter of fact, we continue to see historical highs on the national average here in crude oil. Crude oil not on its highs, but we're still seeing national averages in gasoline as being highs. Remember, going into the summer, we have a different mix, and that is a little bit more costly. Bonds rolling over just a little bit. Gold store value, well, we're not seeing gold or Bitcoin act like a retainer of value right now, which is a little bit disconcerting. It seems like more folks I've been talking about raising capital, putting money in cash rather than putting it to work is a little bit odd right now. Normally we would see folks pulling money out of the equities, throwing it into stores or retainers of value, being gold is one of the major ones. Bonds, we saw a little bit of an uptick there, but gold really not acting like we would expect. And Bitcoin definitely not giving anybody any confidence in a store of value there. Being below 30,000 looks a little sketchy there. NASDAQ off on Friday, got that big, huge rally. Remember in the morning, I said, watch out for that morning sell-off. Well, that's what we got, but we got a snapback late in the afternoon, making this look like a bottom. And that's kind of what we've been seeing on Fridays is those bottoming patterns. There's risk on going into the weekend. We did get our bearish correction, if you will, quote unquote, down 20% from the highs across the board in the equities. Is that where the panic has happened? Well, I would say that if we are going to press the thumb screws on folks on a correction, I don't think that we've seen that kind of pain yet. Yeah, we are getting closer to value, what folks are thinking going forward. But when there's pain involved, it usually means that it's because it is gone too far, and the valuation should get very cheap if we're really seeing a massive correction to put some pain in the pockets of portfolio holders. E-mini S&Ps, again, today, making it look like we're getting a little bit of a bounce here. But until we break the pattern of lower lows, lower highs, we are still in a bearish pattern here, folks. I don't care if it's down 10% or down 20% when we start seeing patterns set up with lower highs and lower lows consistently going down. That is going to be indicative of a bearish cycle there. E-mini S&Ps late in the day, we got that rally heading into the close. That's probably when most of the institutional traders were packing up and got that relief rally, if you will, making the markets look like we were turning around. I am not jumping on board with something like this at this point, especially with the economic data that we've got coming out this week. I'm sticking to layering in small but stocks that I would like to add into my portfolio for longer durations. Now, that would be more blue chips and things like that I don't think are going to have massive upside, but they will be retainers of value. And that's the kind of thought process we need to be going through right now in this type of environment with the markets snapping back and forth consistently. We need to be a little bit more diligent in what we're adding to our portfolios. All right, folks, that's all I got for you guys. Thanks for joining. Don't forget to smash that like button. Hit the subscribe with the little bell so that you guys can get when I'm unannounced. All right. So that's all I got for you guys. If you can't take that, take it easy.